Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update and really a reintroduction to electric royalties, traded on the TSXV under the ticker ELEC, and on the OTCQB under the ticker ELECF. And we're joined today with the CEO and Director of Electric Royalties, Brendan Urich. And Brendan, it's great to get you back on the show. We were laughing off mic that it's been 2 years. It's been since December of 2022 since we've had you on the KE report. And man, there's been a lot that's changed in your portfolio. There's a lot of updates that we're going to try to squeeze into this update today. But I want to kick things off just with kind of an overview of the stable of projects that you have royalties on and properties on. You're in a situation where you have 40 royalties across 9 clean energy metals. You also have about 30 properties that are optioned or in the process of being optioned or available to option to other companies. And you've got some projects that were in production that are temporarily paused, other projects that are getting ready to go into production soon based on where their development profile is. But then you also have a key transaction that you just did on a producing copper project. We're going to get to all that and more, but maybe just from a high level for people that have not looked at electric royalties. Walk us through the vision here of being a diversified, really critical minerals company with multiple irons in the fires and multiple metals.
Yeah, well, I appreciate it, Shad. I know it's crazy. It has been 2 years. Time definitely flies by. We have been busy for sure. We started this company about 5 years ago now, went public June 2020. And our real goal at that time was to buy royalties on the best clean energy metals assets, really in North America, Europe, and Australia, that could fit the bill to be a domestic source of supply of these metals. And when you look at those jurisdictions, there really isn't that many great clean energy metals projects. So we've been at that for 5 years, and we've made a lot of different bets across lithium and copper and nickel, tin, zinc, graphite, you name it. Like you said, we cover 9 different metals. And so we've built up a portfolio of, 41 actually royalties now with this new addition. And they're all in safe jurisdictions. And these projects have really moved along, quite a bit since we acquired them. A lot of these were bets that, we had kind of 5-year development timelines, and now we've owned them for 3 years. And in some cases, they've raised, $70 million, kind of since we last spoke, moving these projects along. And so, yeah, we're very excited about the future. And definitely, I think that security of supply situation, coming into focus much more, with China and definitely what's happening in the US.
Well, maybe one more question on this before we dive into the actual assets. I've noticed a big shift in companies looking at critical minerals because it's not just an ESG thing. It's not just a EV development or a clean energy and renewable energy focus. There's actually government money from the US, from Canada available. There's funds that have been created to move these projects along where it's the first time I can remember seeing government involvement actually trying to help fund the mining industry. And then you also have OEMs, manufacturers coming down, battery companies, auto companies, and partnering directly with mining companies, which I've never seen in years either. So maybe just speak to how you're positioning this portfolio to take advantage of really the focus that we're seeing for the future in critical minerals.
Yeah, well, most of the gigafactories that are, planning to produce these batteries for electric vehicles and for the factories that are making all the stuff we need for renewable energy, those are traditionally being built right now, like in North America, Europe, and Australia. And when you look at needing a source of supply for that, it's pretty risky. A lot of production is based, for some of these commodities. You look at cobalt, the importance of the DRC to cobalt. It's, I think, still 60% of production. China, I think, is about 60% of tin production, 60% of graphite production. They process 99% of manganese for the EV space. They definitely process most of the lithium out there. So I think you're definitely seeing people start to clue in on that. I think Western nations have been really far behind the ball. Like you look what China's done in Indonesia. They've been investing billions of dollars there for the last 10 years. And then, surprise overnight, they now have, a dominant foothold there, and Indonesia's ready to kind of turn the nickel markets on its head. But, that's really across the board for all these metals. So you are finally starting to see government do something, on the funding side. And there was a big package on Ontario that actually just passed. It was tens of millions of dollars, up to only 200,000 per company. So really meant for smaller guys on the exploration stage. So yeah, it's definitely a shift and a dynamic that is shifting that way. And I expect you'll see more and more of that. Definitely more partners moving downstream because, like I said, they're building plants without anything to supply them. And so I think it's going to be a scramble here as we move forward, and definitely picking up the most advanced assets in these jurisdictions is going to bode well in the near term here.
Well, let's talk about one of the new kids on the block here, your 41st royalty, and that is something you announced on just December the 4th earlier this week. You're actually getting a 0.75% gross revenue royalty on the Punataki asset. It's a copper project, and I'd love you to walk us through the specifics of this deal. It looks like this is with Battery Metals Resource Corp. So walk us through how this asset will not only bring revenue in through the royalty, but just the quality of the asset, quality of the partner.
Yeah, well, we really picked this asset, and we love this management team. They're also, despite being a public company, they're actually majority owned by a private equity group, the Yorktown Group, who happen to be also the biggest lender to the project. So they also put up most of the convertible debt to actually get this back into production. The mine itself was a past producer, so it's not a greenfield start. It produced for 10 years under Glencore. They shut down. Copper prices, gold prices were much lower than they are today. And so these guys have, restarted the mine. I believe first concentrate was back in May. They should be reaching, full production here either in December, kind of January. And our funding helps get them there. So, it's nice to be last money in. They've got a fantastic management team. They've assembled some really good people on site. That's always, really important for us. You want to have people that have actually run a mine before running a mine. And so we love it. There's lots of little things that are, really positive about the economics there. But we're excited. It's going to produce about 19 to 23 million pounds a year. That's kind of their forecast production. And, it's in Chile. Chile produces most of the world's copper. That's why we love Chile. I think it's definitely a good place to be for copper. And we're probably going to do some more stuff there. But if anybody wants to wonder what the economics look like that for reference, all of our royalties by large are gross revenue royalties. So you take the annual production rate, you times that by our percentage royalty, and then you guys can pick a metal price, and that kind of gives you an annual expectation on revenue that we're expecting from that. We actually do have a mutually agreeable option. If they do need more money, that we could fund them and double down that royalty as well. But that's immediate cash flow to us, and we believe with that and the addition of the rest of the potential cash flow elements we have coming in, up to 35 potential sources of cash flow, assets that could give us cash flow next year. We believe this kind of puts us over the edge to cash flow positive next year. So,
Well, let's jump on that bandwagon too. You structured a deal where you've got a lot of these properties that if they pay their option payments, their anniversary payments, it brings revenue into the company. Maybe just outline that for people, how that will bring in some cash flow to Electric Royalties.
yeah, for sure. So, as part of our last deal that we did closed in May of this year, we ended up closing on 18 royalties and 32 properties as well. Lithium properties, really all in and around the best lithium projects in Ontario. And when we acquired that portfolio, they already had most of those optioned out. So about 29 of those are optioned out to third parties. So those parties basically make anniversary payments back to us as they buy those properties from us over a 3-year period. And then ultimately those will become royalties as well. But in the interim, we expect about 850,000, over the next 12 months, just on income from option payments coming in from that portfolio. So, our G&A is very low. I think as we've spoken about before, it's about $1.5 million a year. And so, numbers like that are definitely impactful. And then we also have advanced royalty payments on Biscuit Creek. They're coming in this year. And then we have 4 royalties in our portfolio that, we believe actually could come back into production because they've already been in production over the last few years or actually enter production in 2025. So we're very excited about, what the future is going to look like at that point.
Well, let's talk about some of those assets as well. There was 2 producing assets that are temporarily paused. This is the Middle Tennessee zinc mine, but it's also the 10 tantalum producing mine that you had. So maybe walk through both those assets as to what the restart would look like in both scenarios.
Yeah, so starting with Middle Tennessee, that's operated by Trafigura, so a very big, well-capitalized group. And, I think they shut down at the time, they said, because of low zinc prices. Now, zinc prices have definitely rebounded since then, 20, 30%. That mine is actually vertically integrated with the Clarksville smelter, which happens to be the only primary zinc producer in the US as well. So it's actually got some strategic importance. But the big thing I think going for it to come back in line sooner rather than later is that there is germanium and gallium that they do recover from that mine as well. And so, I think if anybody's seen, China's recently done an export ban on those metals, which are, deemed fairly critical to certain industries. And so I've heard rumors that the U.S. government has been talking to them, trying to fund them to process and recover more of those. And so I think that's going to add some impetus to get back production as well. But ultimately, we hope that'll be back in production next year. Like I said, zinc prices are up. It's always been kind of a swing producer, and Trafigura is definitely a group that is capable of doing that. So I don't think we'll have to help out too much on that one. And then on Panuda, if you can believe it, I know it's crazy. That's it was Europe's only producing tin mine. Tin prices are up 50% or so since they shut down in November. They had a permitting issue at the time, which is really unfortunate because they actually do have about 12 months stockpile that they could process at today's prices and still make money while they work through that permitting. But the permitting delay really caused them some financial trouble. So they're going through a voluntary, kind of financial restructuring process. But we'd be very hopeful that they get their stuff together there because it does seem crazy to me that, it was Europe's only producing tin mine. It's been taken off, over some permitting stuff that was, really historical in nature. And with tin prices where they are and, management at the time and continually hit their milestones. So we are hopeful that that will get sorted as well, in this next, 12 months.
All right, now let's talk about some of the ones moving down the pipeline towards production. You've got Graphmata, which is a graphite royalty. This is in Madagascar. I guess walk through where that process is. How soon could it come online?
Yeah, that one could actually come back online very, very quickly. Timing is really subject to project financing. And so that project was in production for, I believe it was 18 months continuously. They had to shut down because of COVID restrictions in the country of Madagascar. Again, this is kind of our only royalty in Africa, definitely one of the few outside of our kind of target zones. But they were producing, they had all of their product qualified with off-takers. Management just announced this year they actually want to bring that back into production now. So they're on the hunt for a strategic partner, and that could be back very quick at very minimal cost. I'd say, somewhere in that 20, 25 million range would definitely bring them back and actually bring it back at a larger production rate than they had previously. So that would be a meaningful royalty for us, if that brought back on next year. And so fingers crossed on that one as well. And then and we do have Oche as well, which is another royalty that we are hopeful could be in production next year. It's part of the North American Lithium Hub, which is now in production. Canada's really only producing lithium mine. And it's operated by Sona Mining, who's in the process of merging with Piedmont Lithium. But those guys did a feasibility study, and the feasibility study basically had 33% of the ore coming from Oche. And so as they are, ramping up production there in production, we are hopeful that that should also, enter production next year as well. So yeah, quite the basket of different things that could go our way next year.
Well, and Brendan, this is a good point to bring in how with a royalty business, it's an unusual business model in that you can have different operators come in. So in this case, on the Oche Lithium project, you have Sayona Mining, but you also have Piedmont Lithium. So now they're combining into a larger company. So you got more brain trust coming together from the two teams. You've got a larger entity, a stronger operator. In the case of when we're looking at the 10 asset, if for some reason they can't restructure it, there's always the potential another company could come in and buy them out and you'd have a stronger operator there. And with a lot of these projects that you're looking at optioning out or that you have royalties on already, sometimes these operators can actually change out, but it almost always gets biggie sized even bigger. Like even the Middle Tennessee Zinc was originally NiStar, and then Trafigura comes in as a stronger operator. So maybe just talk to the value proposition in holding these royalties, this basket of royalties, and how over time things can change around the asset and around the operators, but the royalty is always there waiting to get paid.
Yeah, that's a great point. And we just had an asset update actually come out. And we had our closing release on Punitaki come out. But, two of the royalties in there, great examples of that. One would be Mont Saucier. It's one of the first royalties that we bought. At the time, I think the market capitalization of the operator was like $5 million. They had, a resource out. That was pretty much it. In the time since then, they brought Glencore on as a partner. They've done a updated resource. They've done two PEAs. They've got indications from UK Export Import Bank for up to 500 million for the project financing, and they just announced they're funded through feasibility study. So, that's a royalty we bought, kind of 4 years ago now, and there was almost nothing there, and we're talking about a royalty now that feasibility study within, the next kind of 12 months, and when in production, that'll be over $1 million a year back to us, and they've got a very long mine life there. So, definitely a value proposition. All of that cost us nothing. It cost us nothing to hold that royalty, and all that happened in a pretty short time frame. Seymour Lake would be another great example. That's a royalty. We're expecting to have a feasibility study come out on that too, as well, in the next kind of 12 months here. And since we acquired that royalty, operators have raised $75 million. Operator has changed on that one, and they are much stronger, and they've got financial partners as well that they brought in. But they doubled the resource since we bought that. They did a PEA, and like I said, feasibility study coming out on that too, and they're planning to put production on a very quick time frame. So yeah, a lot of these we have definitely different royalties in different stages, but I think enough now at this point that are in that production, about to be producing, that it's a good blend with the development portfolio that will definitely keep moving forward and bring us some real good growth in the near future.
Well, and Brendan, let's maybe weave in one or two more. We can't get to all the royalties you have, but I'd like to get an update on the Graphite Bull graphite project. This is one that is operated by an Aussie company, Buxton Resources. What can you tell us there that was just updated recently in your news?
Yeah, well, that's a project that's really kind of taken off in the last little bit. It is funny, when we bought that, it was definitely the non-core piece of the package. I think at the time we might have put like $250,000 value on it. And yeah, they've really moved that project along the last little bit. So we're expecting, a big resource update there. They've actually been working slowly on the metallurgy now for the last couple of years as well. So they're talking about going directly to a pre-feasibility study. And that was kind of news to me at the time, when they first announced that. But yeah, so that'll be very exciting. I mean, another asset that was gone from basically an exploration asset that we had, into a pre-feasibility study, over a couple year period. And so yeah, we're excited about that. We have other ones too, like Zonia, which they almost just doubled the resource that they have there, almost up to 1 billion pounds of copper now. And they're marching towards feasibility study as well. And that's one we just had, for the last 2 years or so. And so yeah, there's lots of progress happening, and lots of projects definitely moving forward towards production. Ultimately, is the goal.
One other, I think, value proposition of the royalty companies isn't just the ability to get better producers or operators, or the ability to have a development project that hits a new area. It's the exploration upside that you get. You're not out there drilling, your team's not out there drilling, but some of these operators are. And so just two more that you recently updated the market on. Millennium Copper Cobalt Project. This is with Metal Bank Limited, having some nice graphite hits and also some other metals, copper, cobalt, and gold. And then you also had some nice updates on exploration at Battery Hill Manganese Project, operated by Manganese X. So maybe just talk about the exploration upside in your portfolio.
Oh yeah, definitely. Every time they add a resource to the ground and we have a royalty on it, it's essentially a great example would be the copper project Zonia. If you add 500 million pounds of copper and you buy, let's say copper's $4 a pound, was that coming to about 2 billion or so? Then you have a 0.5% royalty on that. We're expecting to basically get paid 0.5% of that 2 billion. Whenever they dig it up and actually get paid for it. But every pound of copper that they add, we expect to get paid 0.5% of that. And so, yeah, it's definitely a nice part of the package. I mean, that Millennium Cobalt project is a great example. That's a copper cobalt project. We got into it and it was a copper cobalt project, and they still definitely have a copper cobalt angle, but they've had some really interesting graphite results that kind of points to, something unusual happening there. And when you find that stuff, you never know, what could happen. And so that one is really exciting. Yeah, definitely an unusual discovery that they're making there. And then Battery Hill. I mean, look, this is definitely the best manganese asset in Canada. There's really only two that, we think in all of North America really have kind of a shot to be a source of supply for manganese to the EV space. And yeah, they're moving ahead. They're moving towards pre-feasibility study is the plan. Those guys are really advanced on metallurgy. They've worked on that for around back 3.5, 4 years now. Probably the most advanced of any developer we've actually seen globally for this. And so yeah, we're very excited about that. That royalty alone always makes me feel undervalued because the PEA forecasts something like 5 to 7 million a year in royalty revenues back to us with a 48-year mine life. And so you're looking at around 250 million in kind of total cash flows there compared to our current market capitalization today of around 20 million. And that's one royalty of 41 royalties and 73 assets that we have. So yeah, the value proposition is definitely there where we're trading at today.
Well, let's maybe hone in on that as we kind of wrap things up as far as the value proposition overall, where you're valued. Some of these royalties, if you extrapolate out where they could be paying the company in a couple of years, you're incredibly undervalued at your current market cap. What do you think that you'd like to share with people listening that are considering investing in the company or maybe current investors as far as where this company is heading, not just next year where some of these catalysts could come into play with the mine restarts, but also, I guess, longer term over the next couple of years, 3 to 5 years out, where do you see this company growing? Where do you see some of these assets growing? And I guess give us the big picture vision of the company.
Yeah, well, it's kind of funny at this point because of the portfolio we put together. If we look kind of 5, 6 years out, and with what we've already got, without us having to do anything, we see cash flows jumping up significantly. Kind of around the size of our total market cap today, and those would be long recurring cash flows from a number of different assets. So it's kind of an interesting place to be in. Today, I think you look at our company the last couple of years. What's really kind of held us back has been the fact that we had to pay out a lot of our acquisition costs via shares, and like over more in shares than in cash, going back through our history. And almost all of those shares have come back and hit us in the open market over the last 3 years. And so as a result of that, you have Stefan Gleason, who now owns 28% of the company, myself and my family, that owns 16% of the company. We also have Globex, that's 11% of the company. So we've tightened up the company quite a bit through a kind of a painful process over the last 3 years, and we're now at a place where we're trading at all-time lows. We're forecast to be cash flow positive next year. We've got major development milestones expected across a good chunk of our portfolio, and definitely underrated where we're at today. So yeah, I think this is probably the best time and a great time for an update to your investors for sure.
Well, we'll definitely keep tabs on it, and we'll try to get you on more regularly. Hopefully, it's not 2 years before we talk, maybe 2 months, and we'll follow along with some of the news flow from Electric Royalties just to keep tabs on how some of these assets turn on over the next, let's say, 12 to 18 months, but also other deals you may structure. And then also those incoming anniversary payments and options payments bringing revenue into the company because you still have other properties you could option off to other partners. So a lot on the go here with Electric Royalties. And if people listening in want to follow along with the news flow, definitely click on the link below this interview. It takes you right over to the Electric Royalties website, straight to their news section. You can sign up for updates there or just follow along with the news as it hits the wires. Brendan, keep us posted. We'll get you back on for an update. And as always, looking forward to our next conversation.
I appreciate it, Shad. Me as well. I'm sure it won't be too long in the future here.